This property report is powered by realestate.com.au. Know the value of your home today. Track your property now.
To property now, and throughout the pandemic, the shift to outer suburban, regional and coastal areas around the country has been a key trend among buyers. Joining us from realestate.com.au is John Healy. John, it's meant that the prices in many of those lifestyle areas have surged, but so too have stamp duty costs for buyers looking to make a move.
Yeah, that's right. Stamp duty costs right around many lifestyle areas of Australia have surged alongside property prices during the pandemic. And PropTrack data that was out this week found that those looking to make that COVID-led lifestyle shift or a sea or tree change will do so now with a stamp duty burden attached to it as a combination really of increasing median property prices and stamp duty bracket creep comes into play around the country. In New South Wales, the Kembla Grange suburb in Wollongong is a good example. It's seen stamp duty increase 173% year on year as property median house prices there have more than doubled in that time frame. Summers on the Mornington Peninsula of Victoria is in a similar situation with an increase of 79% year on year of stamp duty costs as homes there. The median house price there has put on more than $750,000 in the past year. And Warana, which is on the Sunshine Coast in Queensland, has also seen stamp increase 109% year on year. And it's not just those lifestyle suburbs away from capital cities where this is an issue, it's anywhere where prices have increased. So Goodwood, an inner city of Adelaide, has seen stamp duty increase, and so has Bicton in Perth. And just given the fact that stamp duty costs have increased so much in recent years, it's perhaps little wonder that there have been continued calls to reform the tax, with it being criticised as inefficient because it often acts as a disincentive for buyers and sellers to actually transact in property. And the ACT is well down that path, actually, having begun its 20-year journey to transition away from stamp duty to a broad-based land tax, which began back in 2012. And the New South Wales government, just in June this year, released a progress payment on a plan on a similar model, which sees buyers potentially given the option as to which tax they pay.
And certainly an ongoing issue for buyers, sellers and governments to grapple with. But those looking to make their next move as soon as this weekend, how is the auction activity shaping up?
Well, for the buyers that are looking to make a move as soon as this weekend, there is actually plenty of choice right around the country. We're expecting more than 3,500 properties to go under the hammer nationally this weekend. That's 4.5% up on last weekend's numbers and 168% up on auction volumes around the country last year. Sydney, they're expecting more than 970 auctions this weekend, which is an increase of 4% week on week and more than double its auction volumes this time last year. The suburbs of Blacktown and Cronulla are the auction hotspots there, with 12 auctions scheduled in each of those suburbs this weekend. Melbourne continues its very strong spring selling season with more than 1,400 homes set to go under the hammer in that suburb, in that city this weekend, which is a nearly 250% increase on auction volumes in Melbourne this time last year, as sellers continue to make up for lost time there. And Adelaide's expecting a big weekend as well. 233 homes are set to go under the hammer there, which is 5 times the volume of scheduled auctions in Adelaide at this time last year, as more and more buyers adopt the auction method to sell their home. Numbers around Brisbane and the ACT are down slightly week on week, but still more than double the auction volumes in those cities in the same week last year.
And just briefly, in terms of sales results around the major capitals last weekend, now how did clearance rates fare?
Well, around the major auction capitals last weekend and on the auction results available, numbers were very, very strong again, right around those capital cities, albeit they were down slightly week on week around the capital city markets. Sydney had an 88% clearance rate last weekend. That was its lowest result since August. Melbourne slipped for the third week in a row to an 82% clearance rate. It's been trending down over the past 3 weeks now, as potentially more balance is emerging emerging in the Melbourne market as more homes are going to auction, giving buyers more choice and a more even playing field, which is really good news for buyers there. And the ACT also slipped to its lowest result since July as well, with a 92.2% clearance rate, but clearly still a very strong seller's market in the ACT.